You've probably noticed it, right? When the US dollar strengthens, Bitcoin often seems to struggle. Well, that's not a coincidence. It's a signal. Today, we're going to decode that signal to understand why the world's oldest currency has such a powerful grip on the newest one, and what it reveals about how money really flows around the globe.
And this really gets to the heart of it all. Bitcoin doesn't move in isolation anymore. It's a simple statement, but it reveals a massive shift in how this asset operates now. So let's unpack what that really means. To really get this, we're going to start with the immediate cause and effect. What actually happens across markets the moment the dollar starts flexing its muscles. This is the pattern we can literally see playing out in real time. Look, to understand pretty much anything in global finance, you have to start right here. The US dollar is like the sun that the financial planets orbit around. Its strength is dictated by huge forces like Federal Reserve policy and interest rates, and that in turn directs where capital flows all over the world. What's so fascinating is the predictable chain reaction. When the dollar gets stronger, money naturally looks for safety and yield, and it finds it in US assets. This pulls capital from everywhere else, and it effectively drains the pool of available investment money worldwide. And that puts a ton of pressure on what we call risk assets, tech stocks, emerging markets, and crypto. So the crucial point is this. Bitcoin's recent behavior shows it's really not an outsider anymore. It reacts right alongside all these other assets that are sensitive to liquidity. It's no longer the exception to the rule. It has become part of the system. But how did this happen? So if Bitcoin is now part of the system, what's the engine that's driving it? To answer that, we need to look under the hood at the mechanics of this global liquidity engine. Okay, let's just pause on this term because it is so important. Global liquidity. It's just a fancy way of saying how many US dollars are available worldwide. Think of it like the oil for the global economic engine. Without enough of it, the gears of international trade and investment, they just grind to a halt. This slide lays out the whole chain reaction perfectly. A stronger dollar makes it more expensive for anyone outside the US to get their hands on dollars. That directly tightens global liquidity. And with less oil in the system, investors get cautious. They start selling their riskier holdings. And today, Bitcoin is right there at the end of that chain. The reason the dollar has all this power is because of its unique role. See, most international debt is issued in dollars. Most global trade is settled in dollars. So when the dollar strengthens, the cost of paying back that debt and conducting that trade just goes up for everyone else. And that effectively puts a brake on the entire global economy. Okay, so we understand the system, but how in the world did Bitcoin, an asset that was designed to be outside of that system, get pulled right into its orbit? Well, the answer lies in its evolution. Man, this comparison really says it all. Early Bitcoin was this niche, retail-driven thing that just moved to its own beat. Today, it's integrated into the very system it was built to challenge. Huge institutions hold it, and products like ETFs connect it directly to traditional investment portfolios. And that makes it subject to all the same macro forces. Regulation was really the bridge connecting Bitcoin to the old financial world. By creating these approved pathways, like ETFs, it funneled all this institutional money in. But that money, it comes with rules. So now decisions to buy or sell Bitcoin are made in the same way they are for stocks. And that forces it to react systematically to big market shifts, like a strengthening dollar. So, what's the big takeaway from all this? What does this new behavior tell us about Bitcoin's actual place in the financial world today? Here it is, the ultimate takeaway. Watching Bitcoin react to the dollar isn't just about looking at price charts anymore. It's a powerful signal that Bitcoin has been absorbed into the global liquidity cycle. It now rises and falls with the tide of US dollars flowing through the world economy. So why does this matter? Because this framework isn't about predicting the price tomorrow. It's about understanding why the market is behaving the way it is. It helps explain the volatility we're seeing, that correlation with stocks, and the broader shifts in what investors are willing to bet on. It's a lens for recognizing how money moves on a global scale. Which leaves us with this final and I think really important question to think about. Given how deeply integrated it's become and how it responds to global liquidity, is it more accurate to think of Bitcoin as an independent currency anymore? Or is it now just another global risk asset, sensitive to the very system it was meant to disrupt? Something to consider.